Hello, promoted markets. This hour with the global economic outlook in the week ahead, which is going to be the sixth week of 2025. As always, let's first check what we had last week, and then we can start the week ahead. Last week, the mostly focus was on central banks meetings, especially in United States, Europe, and also the Canada. And the week ahead, while still the central banks in UK and Mexico will have or will hold the monetary policy meeting, still the focus will be shifted on United States labor market data, while the China also will be back from its 1 week New Year holiday. Last week, let's start with the China. Last week, just on Monday, the Chinese market were open and we had manufacturing, non-manufacturing PMI numbers. Both of them, they missed the expectations, but generally we can say that okay, for now, especially on the service sector, the economic situation is not that bad. In the United States, we had a positive economic data, while the central bank also, Federal Reserve also held the rates between 4.25% and 4.50%. New home sales increased. We know that the labor market with only 207 new applications to get the initial jobless claims or unemployment benefits. It was amazing. While we had the PC price index and core PC price index, especially we saw that a little bit increase in the PC price index or personal spending inflation. While personal spending increased by 0.7%, that was another surprise in the U.S. Market, which shows that in the U.S. in the United States, the people still they are so positive about the spending their money, which means that they have a more confidence about their future and economy. On the other countries, the European Central Bank cut the interest rate by 25 basis points. It was widely expected, while the GDP was lower than expected, while generally the economic condition is not good. It's not going well in the Eurozone. That's why the central bank in Europe had no other choice than cutting the rates, which, as I told, which was very expected in the market to support the already weakened economy. And then again, we had a central bank meeting in Canada, where the central bank also in Canada also they cut the rates by 25 basis point. We know that the expected Trump tariffs plus which 25 basis point will be applied from, which is already applied from February 1st. These numbers in line with these expectations in line with the weaker economic number, they are the main reason to for the Bank of Canada to cut the risk. Well, we know that inflation is for second month in a row, it moves in a negative territory. In Brazil, on the other hand, the central bank held its interest rate meetings and they increased the rates by 100 basis point or 1 full percent. The reason is that the inflation in Brazil, the inflation is increasing, and the central bank had no other reason to increase the rates to control the already improving the inflation. In the week ahead, while we are entering to the new week actually, where the Chinese also will open their markets after 1 week holiday, and we are expecting to see what will be the real market reaction to the DeepSeek, and after the DeepSeek AI, they changed the market conditions, especially in the United States and in the tech companies in Nasdaq 100. They put the pressure on the tech companies in the United States. We'll see what's going to happen generally in stock markets with the new AI that the Chinese had. It's much cheaper. It works much cheaper than the ChatGPT. It works much faster compared with so many other AIs that right now they're running in the market. But in United States, we don't have the central bank meeting, but the very important number, we're gonna have labor market data. On Tuesday, JOLT is expected to be again published around 8 million, a little bit less or more, which means that the JOLT is for December, which means that the more job opportunities still we have in United States is more than 1.1 job for each unemployed person. But the focus will be on Friday's NFP numbers, where we are expecting to see the unemployment rate to stay unchanged at 4.1%, with more than 185,000 newly created jobs and 0.3% average earnings, which means that on the annual scale, it's going to increase around 4%, 3.9 or 4%. Generally, with these numbers, we can say that with expected number, if we reach these numbers, we can say that the labor market is still strong in the United States, which is expected to be, and that can confirm the expectations of holding the current rates even for March, which right now there is a more than 85% chance for that. But still, it can confirm it move, and it can be supportive for US dollar and put the pressure on the stock markets. Generally, that's what we expect. But on Thursday, we're going to have the central bank meeting in United Kingdom, where we're expecting to see 25 basis point rate cut, which is very likely to be happen. And even I think that maybe they can make it more, because the economic growth in United Kingdom is facing so many challenges right now. We have very much challenges, and the unemployment, the labor market also started to show more cooling down signals. So that's why the central bank in United Kingdom supposed to cut the rates. But on the other hand, with the new government's plans, economic plan, or we can say that the financial plans or economic plan that right now we have, there is a very powerful fears, actually, with this like big fears about the future of the inflation, which is started again to increase slightly after that it fell to 1.7% as well. Right now it's about around 2.4, 2.5%. So what we're gonna have, this is what we expect, and we have to wait and see what's gonna happen in Mexico. So we're gonna have the interest rate decision and monetary policy meeting, where we're expecting to see 25 basis point rate cut. But at the same time, in Mexico, this 25 basis point rate cut can change to 50 basis point, because, or half percentage point. The main reason is because the tariffs, which started from the February 1st in Mexico, or generally Mexico and Canada with 25% and 10% on China. Most probably the central bank in Mexico will cut more, because to support the economy, which is going to be affected with the higher rates. So that's why don't be surprised if you see that the Bank XO is cutting the rate by half percentage point from 10% to 9.50%. So this is what we are expecting to see in Mexico. Talking about the United States. And the other important data that we have to watch is the inflation numbers. Inflation numbers from especially Eurozone, the core the core CPI and CPI generally. We are expecting to see the core CPI to stay unchanged on 2.7 or slightly fall to 2.6%. But the CPI supposed to stay unchanged at 2.4% or slightly increase to 2.5%. But generally, we can say that these numbers still, even if we reach that, these numbers still, they can confirm that the inflation is under control in Eurozone. But the main reason that we can say that the inflation is under control is not because the inflation rate is under control. No, it's because that the income is very easy in the Eurozone, which means that the people they are not willing to spend their money too much. And now the Europeans, they are thinking more about the saving the money because of the weakness on the economy that they say, and the fears of the future of their income. So that's what's going to happen in Eurozone, and as we're expecting to see from the inflation numbers. PMI numbers is also the main data of the week ahead, which is generally we are not that much positive about the January numbers. That's what we're, especially in Eurozone. That's what we expect to see, the main and the most important data we're expecting to have in the week ahead. About the tariffs also, between my explanation, I explained that the tariffs started from February 1st by 25% for Canada and Mexico, and by 10% in Chinese. That 10% in the Chinese can be actually the positive signal for the Chinese market. Yes, it was threatened it had been treated, the Chinese have been treating by 50% or 60% tariffs, but with 10% tariff, we can see it can be it's kind of the green line for China to work more with the United States against Russia, because they are trying to put the pressure on the Russia against for Russia to end the Russian and Ukraine war. So that's why right now there is the reason that maybe they're trying to be more nice with the China is because they want them to stay among with them against Russia, not against Russia. Actually, we can say to end the war in Russia, to put the pressure against Russia on Russia, because they know that the Chinese are not going to stay against Russia. They're going to be just maybe put the pressure on Russia to end the war. At the same time, the Chinese, the United States asked the Chinese to buy less Iranian oil, so they're putting the pressure, they're giving the kind of green line to China that we're going to collaborate with you more if you collaborate with us more and don't buy the Iranians oil. So that's also the other reasons that you're in the market that people are talking about. The reason why the United States put less tariffs on the Chinese products. So, but generally, which is the positive. So anyway, with these expectations and what we had right now and the positive data that we're expecting to see from the United States market, we're still positive about the US dollar. So the US dollar can have a side movement with the positive or upward tendency, and this that can be the negative for stock markets, which was the negative stock market with the expectations that we have from the central bank, inflation numbers that we had, the GDP numbers that we had, and also the labor market data that we're expecting to have in the next week. Generally, all of them, they're telling that the US market is still strong and we can have the more restrictive policies for future, which is the negative for stock market, and we expect to see that side movement with the downs, not the side movement, this downtrend to continue in the week ahead. But at the same time, with still the tensions that are ongoing there in the market, with the general cold winter that we have right now in many countries, demand is still high for oil. OPEC also will hold the meeting next week on Wednesday or Thursday. So that in the week that in this week in Wednesday or Thursday. So that's why we can expect that the oil price for now to stay positive, but not upward. Upward tendency. So just like somehow we can say that it can increase so fast now, but it is positive generally. About the stock market, we talked. Or about the gold, we talked, US dollar, we talked about the cryptocurrencies. Generally, the cryptocurrencies with the higher rates for longer is negative for the cryptocurrency, while the stock markets are not that happy from the new policies. At the same time, the cryptocurrency market is supposed to wait a little bit more to see the new administration's policies. That's why maybe in the long term it can be the positive, but at least for the short term, for the next few days, we are still the negative on the Bitcoin price and generally the cryptocurrencies because of possible correction before any movement. So these data or numbers are negative for cryptocurrency as well. So we can most probably see the lower levels if we put if it can fall under 101,000 US dollar, then 97 and then 94,000 will be the next targets if it fell under 101,000 US dollar. So this is generally what's happening in the market and our expectations. If you had any other question, don't forget to write in the comment section. I'll try to get back to you as soon as possible. Have a good week ahead. Bye.